Let's go to Wellington now. Business News with Patrick O'Mara. Patrick, it's lovely. You're looking very smart. Patrick, just what the world needed, just another survey. I'm starting to get survey ennui, and this one has confirmed a continuing decline in business. Is it time for the government to worry?
Yeah, John, it's very interesting, isn't it? The winter of discontent, as I'm sure you remember back in 2000, it's been compared to on business confidence. Yes, another survey, another one on business confidence, this time from the Institute of Economic Research. It's found that a net 19% of firms expect economic conditions to deteriorate in the coming months. That's its lowest level in 7 years. The firms themselves, which is a better indicator of how well the economy is going to go, firms' own prospects have fallen to 5-year lows. A bit more positive, but still it's fallen to 5-year lows. And what we're seeing now is it's slightly softer demand that was experienced in the June quarter, plus the fact that firms are now saying they're facing rising costs, which they can't necessarily pass on to consumers, is undermining their profitability. And probably the thing to worry about here is that they're saying that it's actually making them pull back on their investments and intentions. Not necessarily on hiring, that's still growing for now, but investment intentions are down. And I guess it's pointing towards slower growth in the second half of the year. Now, I guess the question we're all asking is, how much is the Labor government responsible for this? And there's no doubt that the measures that they're talking about bringing in, certainly around employment laws, making it easier for people to bargain collectively, the oil and gas decision, which caught particularly Taranaki out, these sort of things have made firms uneasy, and it is coming through in these business confidence surveys. Now the question is, how much does business confidence actually then translate into actual changes in activity? Yeah. And of course, back in, and I'm sure you remember, John, with the last Labor government, business confidence actually was down for most of their tenure, the 9 years they were in power. But the economy powered along at 3.2% growth. So they may not have been happy with the government, but it certainly didn't stop them getting out there and doing what they needed to do. In fact, even better than when National was in power, when there was very positive economic confidence, but growth was not quite as strong, admittedly hit by the global financial crisis and, of course, those devastating earthquakes in Christchurch.
Yeah, it's fascinating, isn't it? It is. It's an interesting thing. Is confidence, do they become self-fulfilling? Ultimately, these surveys, only one way of finding out, and it's to keep an eye on them. Really interesting to see what happened in Asia. I was a bit caught out by a really big slump in the Hang Seng. What's going on up there? 3% off in a day, Patrick?
Yeah, indeed. So this is Hong Kong's main stock market index, but not just them. What we saw is that in the region there is investors are definitely skittish. And we saw the Shanghai Composite, that was down 2% so far this morning. We've seen the Nikkei index, that's Japan's main index, that's down as well at 3-month lows. And look, it's all to do with the looming trade war between China and the US. In fact, this deadline is coming on Saturday. This is when President Donald Trump says that he's going to bring in these tariffs on $34 billion worth of Chinese goods. And that ranges right across the gamut from industrial goods, consumer goods, agricultural products. And China has threatened to retaliate in kind with a $34 billion of their own against American goods. And there certainly is no sign that either side is backing down. We even heard from the Commerce Secretary, Wilbur Ross, saying that even with these gyrations on the markets, because investors do worry about the growth impact of this, Wilbur Ross is saying this administration doesn't care. They're not so worried about what the stock market does. They say that this is the right thing to do because China, they say, has been ripping them off and they're practicing unfair trade. Of course, China denies that, and they themselves are saying that, well, if you want to trade, well, we're prepared to step up. Now, in fact, the problem with this is it's not just stopping there. Trump has also brought the European Union into this. They've said that he's also complained that about their unfair practices, is what he said. And of course, he's in a stoush too with Canada and Mexico, particularly over the steel and aluminium tariffs, which are already in place. So overall, the concern is that, look, if these things come to pass, it could quickly escalate and spiral into a whole set of barriers. Global growth, which has been enjoying a much better run recently, could be undermined. Of course, the Americans, some in America are saying, actually, we're the ones who are really going to be hurt out of all of this. So I guess now that analysts are saying that stock markets are likely to keep falling, particularly in Asia, right for the rest of the week until we find out what happens Saturday our time to see whether these tariffs come in.
Thanks, Patrick. What happened on our markets? I didn't catch up. Did New Zealand react to this?
Yeah, well, if we did, John, it was completely in contrast to what happened over there. We're actually up quite a healthy 111 points, 1.2%, to 9,054. And of course, as you well know, that New Zealand is not immune to doing the opposite of what the rest of the world is doing initially. Looking at the dollar, the dollar has had an effect. We are down below 67 US cents. We're at 66.9. We're at 91.2 against the Australian, and in British pence, 51.
Patrick O'Mara, thank you so much.